deep red crackdown marked. This is a Nifty chart that you're seeing. That's a 4th day of fall and a big fall, 2% cut. Total 4% and 5% Nifty and Bank respectively. Big fall, correction times, and it has reached the channel bottom, lost the 20 exponential moving average, and gap down, heading towards the bottom of the channel. While Bank Nifty also did the same. 3 days of gap downs, 3 days of big fall, correction extending to 5% nearly, 20 and 50 exponential moving averages lost, and then retracement exceeds the 50% Fibonacci, and retracement exceeds the 38 Fibonacci levels, and looks like the cup and handle is getting wider and wider and may eventually get nullified if the price action turn to be lower high in the coming days. So big hit back. This is following this trial ran conflict that the market has crashed on, and we'll have to look at if market would find this opportunity to correct itself further. So the more important thing is to look out what the resistance and supports are. The first resistance will be the 25,750 nearby zone where the gap is formed, then 25,850 where the previous breakout zone is there, then you have the 26,000 grounding number, and then 26,151. Before that, 25,400 also would have resistance because that is another zone where the breakout happened. And downside, this first support would come in at 25. That's a very strong support because the Fibonacci 50 retracement level, as well as it's a rounding number big, and also a previous breakout zone. So that's going to be a very good support. If that is not keeping the market, then it can further fall down to the next low of 24,750. That's a previous swing low, and also the Fibonacci 60. Any breach from there will be catastrophic. And Bank Nifty similarly, resistance will be the gap that's formed at 52,800, 20, and then the 53,358 with the cup neckline, and another gap at 53,750. That's all resistance from the upside. Downside, the supports would now come in early at the Fibonacci 60 retracement level at 51,500 zones. If that is breached, it could find support at 51,000, and then eventually it could go to the 50,350, which is the previous swing low. That's what the support resistances are there. So we'll have to keep a close watch as to how much it extends. So the only thing that we can do is to look at the Fibonacci retracement from the previous swing low, and if it is breaching the 60, then it can be very sharp. Look with the closest breaching 50. Anything beyond 60 on the downside or upside is dangerous if the Fibonacci levels are breached. So let's hope those Fibonacci level supports will work out. Similarly, this parallel channel is long maintained if that is breached, and also the price action higher low would get breached at this 24,750 zone. That will also match with the 60 Fibonacci retracement breach. So anything beyond this 24,750 would be really bad. So that's how the levels are. So today it was long and winding, and then it's an expiry day, and it was short build up in the Bank Nifty, and everything was falling down, right? If you look at the indices, sectoral indices are all down, and it's it got a big hit by the reality and the auto sector fall big time, 3% and 4% more. Reality 4.5%. So all red. Heavyweight stocks have contributed maximum. Reliance fell big, 4% nearby fall. And TCS neutralizes in the beer zones now, and ITC Kodak Bank also falls 3%, just as well 2.5%, HDFC Bank. So overall big fall down all the heavyweight stocks indices. So some of the sectoral indices have fallen to beer zones, and heavyweights, few of them have gone to the beer zones in the short term. So tomorrow is a Friday, so we'll have to look at as to what the bad news is around regarding the war. So as long as something hopeful comes on that, can keep falling, it can find an excuse and fall further down. Dollar is spiking up, and then gold is ready to consolidate and then break out for the next leg. Obviously gold spikes up when the market falls because it's a safer habit. These markets have recovered and then still at the top, not fallen up too much, and we'll have to see what happens to today's market. So So you have to be careful, cautious. And for investors, you can keep buying over any dip. And if market corrects with 10%, there will be opportunities for even swing traders and on positions, not very long term, to even personal medium term. Investors can also put in money. Even medium term traders also can put in money and buy in if it is exceeding the 10% and goes towards the 15 or 20% correction. And it may not be a good idea to put in the money now, because it can bring in more black swan events when the war situation keeps escalating. So take questions. Option buying on the put side with tight stop loss can be played, but playing non-directional straddle triangles and all this time may be dangerous on the downside. Right, so that's all I have. Bye.